Life can get hectic when you start a family, but which can help you make confident decisions from improving your home to financial planning. We'll make sure you're prepared. Whether you're looking to reduce your household bills, seeking advice around your child's health, or want to find our best buys for your new home, Which has got you covered. Use our expert advice to make the right choices for you and your growing family by visiting which.co.uk/growing family. That's where you'll find everything you need to make confident decisions and have peace of mind that all the advice you're getting is 100% independent. So to find out more, just head to which.co.uk/growing family.
When life gives you questions, Which? Get answers.
Welcome to the Which Money Podcast, your weekly hit of money news and personal finance hacks to help make you better off. I'm your host, Lucia Ariano, and here's what's coming up this week.
One of the most common misconceptions people have is checking your credit score can damage your credit score. So sometimes people just don't look at it because they're like, that will make it worse. And actually it doesn't, to be clear, it doesn't damage your credit score checking it at all. You check it as much as you want.
I would say, especially before you apply for any credit, check all 3 credit reports, because sometimes your score might be fine, but there's still actually something wrong underneath it. So just to be sure, check all 3 credit reports, even if it's a little bit of a faff.
This week, we're talking about credit scores, the 3-digit number that you might think is the key to getting a new credit card or having a mortgage application accepted. But this is just the tip of the iceberg. Today, we'll be covering what happens when credit reference agencies have wrong information about you, how often this can happen, and what you can do to protect yourself. And to help us decode your credit score and credit report, we have 2 brilliant guests here with us today. Megan Thomas, a researcher and writer here at Which, and Adam French, a senior editor at NerdWallet. And for any of our seasoned listeners from how long ago, Adam?
2 years plus.
2 years plus. Adam used to work with us here at Which. Well, thank you for coming on the show. Thank you too, Megan.
Hi, thanks for having us.
Okay, shall we start from the top then? Credit score and credit report. Megan, can you just give us an overview?
Yeah, so very basically, your credit score is a number. It's generally in the range of 0 to 1,000. And it's an indicator of how trustworthy you are in the eyes of a lender. So how likely you are to pay back anything they lend you. And so a lender could be anyone. It could be, someone, a mortgage provider, credit card, even a phone contract. So they're using that score to kind of get a sense of how creditworthy you are. The report is the underlying information that's behind the scores. So it's a record of your credit accounts and other financial information. And that's what gets passed on to the lenders.
So the score is kind of the top level bit. I mean, are we looking at both of these, Adam? Do people read beyond the score?
Generally speaking, people don't. It's like your car or your computer. You only really start to dig into what's going on under the bonnet when something goes wrong. So generally speaking, if your score suddenly comes up a bit low, that's when people start to dig into what's happening and actually getting into the detail of their credit report. But as Megan says, that's a backwards look. That's looking at your credit history, how well you've been paying things back in the past. It doesn't necessarily reflect your financial situation in the here and now, which is often where some of the criticism from people will come in.
And Megan, what do you think? Are people looking at the credit report?
Yes, so we did a survey actually in July of this year. We surveyed 4,193 members of the public, and that was representative of all UK adults. And we found that in the last 5 years, 45% had checked their credit score, so that's still less than half, but only 25% had checked their report, so even less.
I'm guilty of that.
Yeah,
I'll often just check the score, and if nothing's moved dramatically,
I think that's what it is. It's kind of hard to get a context with the report, but the score, you say high number good, low number bad.
Well, I'm going to be brutally and embarrassingly honest. I haven't checked my credit score in quite a long time. I'm not going to tell you how long ago it was, but we'll get on during the show as to why that's a bad thing and why I must check it soon, and we'll come on to that later. But first then, let's put the credit report to one side for a moment. Can we talk about the score? How is it generated? What does it look like?
So the credit score is based on a range of things, but most significantly your borrowing history. So if you have outstanding credit card debt, if you've defaulted on a mortgage payment, that's really going to bring your score down. Whereas if you're consistently repaying, like a credit card, that's going to boost your score. There are other things like not having a lot of credit history that actually could bring your score down. But it actually will depend on which score you're looking at to see what has the biggest impact on that score.
So you say which score you're looking at. There are more than one, right?
So there are 3 main credit reference agencies in the UK: Experian, Equifax and TransUnion. Each of these 3 credit reference agencies will give you a score, but there are also other services that provide you a score based on that information. So there's actually a huge number of different scores you could see out there just for your own information.
And do you need to check all of them?
Well, you kind of can't obviously check all of them, but yes, to be honest.
Is one enough? No.
No, because they're 3 different sources of information, they're not necessarily all the same. And you actually won't necessarily know which one a lender's checking. So you could check, say, Experian, but your Equifax score is really low, there's something not quite right on your report. And if the lender's checking Equifax, then you're going to get refused your credit application, but you wouldn't know because you've checked Experian.
So might a lender then just check one credit report?
Potentially. So lenders could use all 3. Could use just one. They could use 2. It's clear as mud, isn't it? This is part of the challenge when you're applying for credit in the UK. Is it goes into this sort of black box. You do an eligibility check, and a big part of that is almost always a credit check ultimately. So they'll do a soft check on you on the background that won't be recorded in your credit score. That's where they get this information, but you have no way really of knowing which one they've gone to or whether they've gone to all 3. So therefore, if you've got a massive problem with one credit score because something's not quite right in your credit report, then that could have a real impact on your application. So it does make things pretty tricky. The good thing is if your credit application is rejected, you can actually ask which credit reference agency did you get that information from and hunt it down and try and get it corrected, but not always an easy process to follow either. So there are things you can do that are practical, but it's pretty opaque and not easy.
So I suppose you can't tell before which credit agency your lender is going to be using.
Unfortunately not. You can't even say, please use, it would probably be a bit of a, please use the good score. Wouldn't go down very well. It's confusing. So where I work with NerdWallet, it's a big presence in the US, and actually credit scores there work a little bit differently in that they're all the credit reference agencies exist there as well. So you've got TransUnion, Equifax and Experian, but they don't produce scores themselves for you. It goes through to something called a FICO score or a Vantage score. So there's another company involved just to keep things really simple. But those scores are consistent. And actually what you'll see in the US is loans and credit cards are advertised with a minimum credit score that you need. So rather than hoping when you do an application that your right credit score's looked up and things work out, you know what the minimum is and you kind of have a pretty good idea that you're going to get that product. So don't say it very often, but things actually are a bit better in America than here, at least when it comes to taking out a credit product. Now, culturally, their attitude to credit is different to us in the UK as well, but certainly things are a bit more simple and transparent.
Oh, it's a good point you've just mentioned there, because we haven't actually said any numbers yet. What is a good credit score in the UK?
It's as close to the top end of whatever scale they're using. So for some, they might stop at 700, and 700 is the best you can get. Some it's 1,000, and 1,000 is the best you can get. It will say what the spectrum is, but the higher the better. Sometimes you don't need to worry about perfect, like just good or great is fine. It's really when it's bad that you should be concerned.
So your score might be great, it might be perfect. Are lenders happy just seeing that, or will they also be looking at your report?
So lenders don't actually look at the same score that you see.
Okay.
Which isn't helpful. They come up with their own score based on, whichever things are more valuable to them, which they think are better signifiers. And they actually won't tell you what that is. It's kind of like a trade secret usually. So it's confidential. So they'll get the information in the report from the credit reference agencies rather than the score that they're showing you.
And that will vary from lender to lender, exactly what they decide is most important. So again, getting some transparency around that is really tricky. And actually in the bad credit space in particular, what we've seen is a handful of lenders now, they don't even look at your credit score. To assess the affordability, they'll use something called open banking, where you basically say, yes, please have a look at my bank account and everything I've got going in and out. And they'll do that to assess your affordability instead. And they say that's particularly in the bad credit space. So you have this narrative playing out quite often at the moment where companies will say, credit scores are a thing of the past, ignore it, it doesn't matter, it's all about open banking, it's all about your affordability now. But often that's pushing quite high interest loans at people whose financial situation probably isn't great. So there is still, I think, a role for credit scores, but it doesn't help that it's this opaque and confusing for people to get their head around.
Well, should we just hold on open banking for a moment? Because I don't think we've really touched on that on the show. How do you say yes? I'd like to be available on the open banking market. I mean, how does this work?
You basically give a financial institution, so they have to be regulated by the FCA and all the safeguards are in place. But you basically give them permission to look at your bank accounts and what's going on with your finances. Now, it can be for applying for a mortgage or a loan. It could be in combination with a credit score as well. Some lenders will look at this. Some employers in government roles, for example, will use open banking to see you're not spending money on anything too dodgy. This is something that was introduced a few years ago to give institutions another way of looking at your financial information. But in particular, what we've seen is lenders in the bad credit space are using it, as I say, this narrative about your credit score doesn't matter so much.
Right.
Actually, what matters is the here and now around your affordability. And actually, it has some real positives as well. So it does mean people who maybe have a black mark on their credit report from 5-6 years ago, it won't have an impact and they can borrow money they need. It also means you can spot people with problematic spending patterns. So if you're a habitual gambler, they'll be able to see that from open banking, whereas you may not disclose that during an application. If your credit score's all right, then you could end up taking out a loan to fund a gambling habit that's developed relatively recently. So there are positives to it as well, but I think it's just another thing to be aware of. Actually, spoke to the FCA maybe 6 months ago now. I was always labouring under the misapprehension that to borrow money, you had to the lender had to do a credit score check on you. They had to do a credit check, a hard credit check on you.
I would have thought that too.
They don't. They just have to assess your affordability. Now, they have to be able to prove to the FCA they've done that, which invariably means they'll say they've done a credit check because that's the easiest way of doing it. But actually, open banking in some cases is deemed adequate. So it's a complicated market out there.
And the point you made about not wanting lenders to see, a black mark against you from 5 years ago, is there any way of stopping lenders seeing that? Going back to credit reports, is there any way of stopping lenders seeing a black mark from, or some kind of information on your report that you don't want them to see?
If it's accurate, no. The only way to get something removed from your credit report is if it's wrong. But if any accurate information, missed payments, that's kind of what the report's there for. So you aren't able to remove them. They'll go away themselves after a certain number of years, depending on what it is. So if you get like a county court judgment where you declared bankrupt, that maybe 6 to 10 years. But before that, no, you can't do anything, unfortunately.
Well, let's get deeper into credit reports, inaccuracies, what to do if there are any, what could go wrong if yours is incorrect, and how to go about improving your credit score. All after the break. That's next.
If you're enjoying this podcast from us here at Which, then why not become a Which member? Right now, we've got a special offer, especially for podcast listeners, meaning you can choose any of our 3 membership tiers for 50% off the usual price. Starting at just £39.50 for a full year, you can get Which magazine delivered direct to your door. For the same price, you could also choose a digital Which subscription, giving you access to all of our product reviews, the Which app, and the digital edition of Which magazine. What's more, you'll also be able to use the Ask Which service for personalised one-to-one buying advice. Or why not get a full access Which subscription for just £49.50 for a full year? Don't forget, that's 50% off the usual price. To join Which or to find out more, just head to which.co.uk/podcast offer That's which.co.uk/podcast offer, or click the link in the description for today's podcast for 50% off a Which annual subscription.
Welcome back to the show. So, credit reports then. Megan, when you look at one, what will you see?
So you'll see your personal information, name, date of birth, current address. There'll likely be a list of your previous addresses as well. Any active or recently closed credit agreements, any, as I say, defaulted accounts, anything like that, if that credit agreement has been disclosed, and any financial associates, actually, if you share a joint account with someone, that will come up on your credit report as well. And
should we touch on anything that's not in your report that maybe you might think it would be?
Yeah, so we found huge misconceptions around this when we did our survey. 40% of people in our survey believe that how much money you have in your current account would be on there, but that's not the case. They won't have your salary, your savings, any tax you've paid. That's not on your credit report. The lender might ask you that outright and you would tell them, but that's not on your credit report. There are some things that aren't there by default, but you can sign up to services to report if you want. So things like rent payments, any subscriptions, they're not already on there, but you can get them.
And why might you do that? Just to better your score?
It's if you've got no credit history, basically, you haven't got a credit card or mortgage, and you just want something on there to show that you're, responsible and you're regularly repaying something.
It's all about being able to show you're good for the money.
Yeah.
Is really what a credit is. I'm good for the money, here's a way of proving it. So you could be paying your phone bill on time, but actually saying, I'm paying rent, here it is an easy way of doing it, particularly if you've never had want or need for a credit card or anything. It's very easy to become, I think Experian called them credit invisibles, where you just don't have a credit history. And actually when it comes to, when you do, the day comes you need to take out a loan or a credit card, or you want to get a mortgage and you've been saving diligently for years for a deposit because you've never borrowed money, it makes it weirdly hard to borrow money.
It's quite weird, isn't it, that it wouldn't account for, if you're making a monthly savings payment to a savings account, that wouldn't somehow be included.
Yeah, it's about repaying debt rather than making savings. But yeah, as Adam said, it's sometimes worse to have no credit history because they just can't make sense of how risky it is. Because you're a ghost, you could be really reckless, you could be really diligent. They just don't know, and they're not necessarily going to take that risk.
There are credit builder products on the market designed specifically for this as well. So there are credit builder credit cards where you can only borrow a relatively small amount, and as long as you're paying it back each month in full, it builds your credit history. And that's something quite often targeted to people either trying to rebuild their credit score or people who just don't have one. But I think being able to link things like rent payments is a lot more of a financially wise choice in a lot of instances, because you're not taking on debt you don't need to. Because the last thing you want is people taking on debt they don't need to build a credit score so they can take on a debt they do need.
It does feel backwards, doesn't it?
That's a difficult situation to justify.
And it's becoming really clear that there are many layers to this, and it is really confusing, isn't it? I mean, what's on the report and what isn't on the report, this just feels like it's adding to that confusion.
Because you kind of think of a credit score as just part of your broader finances. Like you could be in a really good financial state, but if you've not borrowed money, suddenly that's not on your credit report. It creates a bit of a disconnect for people. And again, those misconceptions we touched on, one of the most common misconceptions people have is checking your credit score can damage your credit score. So sometimes people just don't look at it, because they're like, that will make it worse. And actually, it doesn't. To be clear, it doesn't damage your credit score checking it at all. You check it as much as you want. But there's a lot of misconceptions and just a lack of understanding. Sometimes you wonder, that may be to the benefit of some of the credit score companies, because if it's more hard to get your head around, then you're just going to trust the number you've got and carry on. That's that kind of, don't worry about what's going on under the hood, just as long as the engine's running, we're fine. But it does make things really, really confusing for the average punter in the street who just wants to remortgage because rates are finally dropping.
Or should we talk about what's going on under the hood then? And if there are inaccuracies, what kind of inaccuracies these might be and what you should do?
I mean, it could be a huge range of things. So it could be they've said you've got a defaulted account that you don't recognise. It could be something simple like an incorrect address, but if they link that address to something bad, then that could have a damaging impact. Like it's quite a broad range. So any of the information they have.
The case study in your Peacemaker was extraordinary.
Yeah.
Like the electoral roll had his address wrong.
Yes. So this one, some of them are so baffling. So he had supplied his postal address to a lender, and they'd said, "Oh, there's no credit history here," because it didn't match the electoral address that was on his credit history, because there was sort of one street different. They just didn't specify the village on one and they did on the other. And that just meant he was outright rejected. They say, "You've got no credit history." So yeah, it could be anything. And crucially, it's things that aren't your fault and that you wouldn't know unless you checked. Our survey found the chances of you spotting a mistake are actually quite high. So 30% of the people in our survey who'd checked their report had found a mistake. Which is absurd. I was saying I've found one in my credit report as well. When I was looking into this.
Our producer James is nodding and Adam's nodding as well.
I found one a few years ago. It's the telltale sign of two scores are very similar. One was dramatically different.
Really?
And that's usually the giveaway that there's something wrong in that credit report. And it was an address issue. Again,
mine was an address, yeah.
One had never found its way onto the system with one of the lenders, so I just disappeared according to them.
Mine was an address that I'd never lived at.
No way.
And I thought, well, where have you got this from? But I just messaged saying that I've never lived there, and it was quite easily resolved. But they aren't always.
Well, this stat you mentioned, we'll put a link in the description of today's show to the piece that all of this research is in, and any other useful bits that you might find interesting. And before we get to rectifying these issues, if you have any inaccuracies, can we just touch on a few more examples? Because I know you've got some quite outlandish ones, Megan.
Yeah, so some of the sort of most egregious issues come when you're dealing with a third party. So it's not just you and the credit reference agency, it's a company reporting something that's wrong. So I spoke to one man called Peter. So he got a rejection from a credit card. This was April 2022. And he couldn't see why. You know, he'd had a good financial history. So he looked on his credit report and he found that there was an account from O2, which he didn't have, that was, that had defaulted. It was under an unfamiliar address. He's like, "I don't have an account." So he goes into the O2 shop. They're like, "Get in touch with the fraud team." He sends an email to the fraud team. And then he gets, an apology from O2 customer services saying, "Oh, of course, we'll take that information down." But that didn't happen. O2 then told him, "Oh, you need to go to Equifax," which was where the report was. And then they said, "Oh, we only accept communications from O2 fraud." But even though he'd contacted O2 fraud, it was customer services that came back to him. And then eventually getting sick of this, he went to the Financial Ombudsman Service and they ordered O2 to fix it and give him £300 compensation. And so this is October 2023, so we're already more than a year in the future. But then in March 2024, Peter got a letter saying, "Your circumstances have changed. We're going to have to increase your interest rate on your credit card." I know. So he looks at his credit report, that account's back up. And so I spoke to him like sort of April through May, and he only got it finally resolved when we were able to reach out as Which saying, "What's happened here?"
What on earth?
And they paid him another £300 because it went on more than 2 years this problem was going on.
I mean, do we know how this has happened?
I think what can happen is this sort of shifting blame game. So O2 are saying you need to go to Equifax. Equifax are saying, no, you need to go to O2. And then Peter's stuck in the middle. And he was so understanding when I spoke to him. He was saying, it's not any individual's fault. Like all the people he spoke to have really tried to be helpful, but he just kept slipping through the cracks.
Is it also an example of fraud? So somebody giving this person's details somehow and...
Yeah, absolutely. This is something that came up a lot during my time at Which a few years ago was identity theft and identity fraud. And it's surprisingly easy to happen. A lot of people give away a lot of their information. I know we've got better at it in recent years, but people certainly used to give away a lot of personal information online, silly quizzes on social media, that kind of stuff.
They're the worst, aren't they?
Scammers can use that to start to unpick and put together your passwords, put together your address, a few key pieces of information, and they stand a good chance of stealing your identity, obviously for the purposes of taking out things like phone contracts or borrowing money in your name. And often that's something that you wouldn't have a clue about until the lender gets in touch with you, or you see it come up on your credit report and you're like, I never took out that phone contract. What's going on? Those are the kind of things that can happen. And certainly the case studies I've dealt with in the past, this is always the one where it gets most complicated trying to get it sorted out, because again, to move a point, Megan, the blame game starts, people push you around, no one really wants to seem to deal with it very much. And it seems like Which are the ones that have to step in still and get things fixed, which is it's a real shame that that's still the case.
And you mentioned just then, Megan, so if you do spot something that seems odd, inaccurate, you go to your credit reference agency and they should sort it out. Is that right?
Yeah, so on the bit of information that's incorrect, you can put a notice of correction where you explain. In my example, I said, I've never lived here. I don't know where you got this from. And then they'll look into it. And if it's not complicated, they'll say, yeah, you're right, we'll take it down. But sometimes they'll say, that seems to be right to us, or we've talked to whoever put it there and they say it's right. And that's when you get into this more back and forth. But hopefully it should be the first straightforward option.
So it should be relatively easy. Can we just also rewind very quickly? It's free, is it, to sign up to these agencies?
Yes. So this is a really important point, actually. Everyone has free access to their statutory credit report. A lot of people think that they have to pay for these.
You used to, did you? I'm
yes,
trying to think back to many years ago.
It used to cost £2. Okay. But a lot of companies, have a system where you sign up.
It's premium kinds of.
Yeah, sign up for the premium service and you'll get a monthly credit report, but you have access to that anyway. Unfortunately, it can be a little bit awkward to access your statutory credit report. Not only just that you have to look at all three, but in the instance of Experian, for example, you have to make your application and then they post you a passkey a week later so that you can log on. With Equifax, you have to make an account, verify your identity. After that, you can check quite easily on a repeat, but the first time's a bit of a fiddle.
Well, we've covered so much ground today. But before we wrap up, is there any final advice that you'd like to give? Anything you'd like to repeat that we've already talked about? Stress, even?
I would say, especially before you apply for any credit, check all three credit reports, because sometimes your score might be fine, but there's still actually something wrong underneath it. So just to be sure, check all three credit reports, even if it's a little bit of a faff.
I'd say don't stress about it. Do check it every now and then, but don't stress about it. It's a useful tool to have, particularly if you want to borrow money. And again, checking it and making sure your finances are in a good place is a really, really sound approach to take. It's worth checking every now and then, just if something's dramatically changed and you haven't borrowed money, then identity theft, identity fraud, it could be an early warning sign of that as well. So it can be a really helpful tool as part of your sort of personal finance arsenal, really, but it isn't the be all and end all. I know a lot of people online say it doesn't matter. I've seen Reddit threads where people talk about credit scores are a scam. They're not. They are useful, but they're not something you have to lose too much sleep over. I've got family members who've recent history, mortgages have been a challenging one. And, the credit score has a massive impact there on some regular outgoing. You've got a mortgage, for example. So they are absolutely worth staying on top of, but it ultimately is just a reflection of your history when it comes to meeting your financial obligations and paying off debt. And that's ultimately the best advice I could ever give is do pay your debts. And if you're struggling to do so, there is help out there. Ask for it, because that will have less of an impact. Because if you do default, if you do, heaven forbid, have a county court judgment against you, that can have quite a big financial impact then. So it is a tool to take the temperature of your finances, and then it's about dealing with it and not burying your head in the sand.
And just to end then, it's very clear how convoluted this whole process is for us to have to check three and more. We've heard about it all today. Is there any change on the horizon? Should there be?
The Financial Conduct Authority, the FCA, did run a consultation because they're trying to make the sector more accessible and transparent. And as part of this, Which did push for a single portal where you can access every credit report at once, correct any mistakes to cut out this sort of running around all the different places, make it as easy as possible. And the FCA at the moment, they've got a working group set up to try and take some of these plans forward.
Well, thank you both so much for coming on the show today. Adam, thank you for coming
thank
in.
you.
Lovely to see you.
That's an absolute pleasure.
Thank you both.
Thank you.
Well, a huge thank you again to Megan and Adam for coming on the show today, and to you for listening to this week's episode of the Which Money podcast. If you enjoyed today's show, please do hit subscribe to make sure you catch our new episodes as soon as they drop. For daily money news and advice, you can find us on social media at Which Money and online at which.co.uk/money. And we also have a free money newsletter, which is delivered to your inbox every Monday. To sign up, visit which.co.uk/money newsletter. This episode of the Which Money podcast was written and presented by me, Lucia Ariano, and produced and edited by James Rowe.
If you're enjoying this Which podcast, then you might also be interested in listening to other podcasts that we have to offer, like Which Shorts. Which Short is our weekly podcast that brings you a flavour of what the Which magazine has to offer, as well as our dedicated travel, gardening and tech magazines too. Each week we handpick a review, investigation or feature that was printed in one of our magazines and written by one of our award-winning writers. We then bring it to life on the podcast. So to get a taster of what Which members get in our suite of magazines, be sure to listen to Which Shorts wherever you get your podcasts.